All right, let's get right into it. For the last 100 years, there's been this one signal, and it flashes right before every single major economic disaster. Think of it like a warning light that the whole system is about to break, and a massive transfer of wealth is about to happen. We saw it right before the Great Depression, again before the stagflation of the 70s, the dot-com bust, and of course, the 2008 financial crisis. And guess what? Right now, that signal is flashing brighter than ever.
Look at this. This chart tells the whole story. It tracks the performance of gold against the S&P 500. And every single time that gold line punches above the stock market, the economy snaps. This isn't a coincidence, folks. It's a fear gauge. It's what happens when the smart money gets terrified and sprints from paper assets to hard assets. And when that happens, governments don't just stand by. Oh no, they intervene. And their intervention is usually what lights the fuse for the real chaos.
So that leads us to the billion-dollar question, right? When a government's debts are so massive they're mathematically impossible to pay back, what does it do? It doesn't just default, not in the way you or I would. It does something far more insidious and honestly far more clever. It changes the rules of money itself. And to really get what's coming, we have to look at the last time they ran this exact play.
We're jumping in a time machine back to 1933. The country is on its knees in the Great Depression, and the government's books are an absolute disaster. They needed a reset button, a way out, and they found one. It was a simple, brutal, and just stunningly effective strategy, and it's become their go-to playbook ever since.
It all started with this, Executive Order 6102. I mean, can you imagine waking up one morning and the government declares that the gold coins you've been saving are now illegal contraband? Private ownership of gold became a crime. You were forced under the threat of 10 years in prison to hand over your savings to the Federal Reserve.
And this is the playbook in 4 brutally simple steps. First, they make it illegal for you to own it. Second, they force you to sell it to them at a fixed, rock-bottom price of $20 an ounce. Then, and this is the genius of the whole scheme, the moment they have it all locked in their vaults, they pull step 3. They change the price. Overnight, that same ounce of gold was revalued to $35. With just the stroke of a pen, the government's balance sheet magically healed itself, and they paid their debts with a dollar that was now worth way less. Anyone who followed the rules and held cash got wiped out.
And this is exactly why that history lesson is so critical right now. The national deficit is on track to hit $2 trillion for 1 year. The interest payments alone on our national debt are now one of the biggest line items in the entire federal budget. The math just doesn't work anymore.
So here we are, we're right back in a 1933 situation. The system is arithmetically, undeniably broken. The national credit card has been maxed out for 50 years, and the bill is finally coming due. And just like last time when the spreadsheet breaks, you don't fix the spending, you just change the rules of the spreadsheet.
Now we're getting to the heart of it. The government is getting ready to run the 1933 playbook all over again, but this time with a 21st century twist. They're building something I call a shadow ledger. Basically, a secret stash of assets ready to be revalued to bail out the system. And we've found the smoking guns that prove it's already happening.
Hardly anyone saw this. It was buried deep inside a Fed research paper from August of 2025. This one sentence is basically them telegraphing their entire plan. They are openly exploring a reevaluation of U.S. gold. This isn't some backroom conspiracy. It's a policy proposal that they've hidden in plain sight.
Okay, let's just do the math because this is where it gets absolutely insane. Right now, the U.S. officially values its huge gold reserves at some pointless ancient price of about $42 an ounce. The total value? A measly $11 billion. But if they revalue it to the market price they floated in that paper around $3,300 an ounce, that $11 billion instantly becomes $860 billion. Poof! They create almost $1 trillion out of thin air.
And let's be crystal clear about something. This move does absolutely nothing to fix the real economy. It doesn't create a single job, it doesn't build a single bridge, it is a pure accounting gimmick designed to do one thing and one thing only: fix their spreadsheet, to make the debt numbers look less apocalyptic before the next crisis really hits.
But here's the 2025 plot twist. The playbook has been upgraded for the digital age. The government knows that to pull this off today, they need a digital asset on their shadow ledger. It's not just about that yellow metal anymore.
And here's the second smoking gun. In March of 2025, an executive order quietly created something called the Strategic Bitcoin Reserve. Now, the government isn't out there buying Bitcoin. They just stop selling the massive amounts they've seized from criminals over the years. They're sitting on a stash of over 170,000 Bitcoin, effectively turning a seized asset into a strategic national reserve.
And you can see the game plan on this chart. As the price of Bitcoin goes up, this reserve becomes a massive, ever-growing backstop for the national debt. They have effectively turned the U.S. government into a giant crypto hedge fund, betting on the price of a seized asset to bail themselves out. And if you're holding only dollars, you are the other side of that trade.
So what on earth does this all mean for you? Well, it means the very fabric of our economic is changing. We are watching it split into two completely separate financial realities. And the side you end up on is going to define your financial life for the next decade.
This chart just says it all, doesn't it? Over the last 5 years, the value of assets, stocks, real estate, crypto, they're up 90%. Now look at wages, what most people work for, up only 22%. This isn't a gap, it's a chasm, and it's getting wider by the day. And this great revaluation, it's about to pour jet fuel on this fire.
It really boils down to this. You've got column A, the asset owners. Their wealth just floats up on the tide of inflation. They're protected. Then you have column B, the wage earners and the savers. Their income can't keep up, and the cash they hold is being systematically devalued to pay for all this. You really have to ask yourself, with brutal honesty, which column are you in? This leads to the single most important takeaway of this entire breakdown. In this new world, working for money is a losing strategy. You cannot save your way to wealth in a currency that is designed to lose value. You have to own the very assets the government is trying to inflate to solve its own problems. Now, listen, this isn't about predicting doom and gloom. This is about awareness. Because once you understand the playbook, you can actually position yourself for what's coming. There's a massive new wave of liquidity on the horizon, and you need to be ready to ride it.
So how do you do that? First, you start watching the real signals. Forget the nightly news. Watch the national deficit and that gold to S&P ratio. Second, you have to completely rewire your brain about money. Cash is not a safe asset. It's a liability. It is a melting ice cube. And finally, you have to get exposure to things that can't be printed out of thin air. Real estate, good businesses, scarce digital assets, commodities.
And there's a date. There is a catalyst that you need to put on your calendar. December 1st. That's the day the Federal Reserve has already said they are ending their program of quantitative tightening. That's the official starting gun, the signal that shrinking the money supply is over and the next chapter is about to begin. The money printer is being warmed up. The next great tidal wave of liquidity is coming. That's not a prediction, it's the stated policy. And that leaves you with a choice. You can either understand these forces and get your surfboard ready to ride that wave, or you can stand on the shore holding cash and get completely drowned by it. So, I'll just leave you with this one question. The fundamental rules of money, the rules that have governed wealth for half a century, are being rewritten right now in real time. The only question left is, are you paying attention?
And a quick reminder, the content in this explainer is for informational purposes only and does not constitute financial advice.